Close your eyes for a moment and imagine this. You are about to make a decision so big that if you are wrong, you lose everything. Not thousands, not millions, billions. Now imagine something even more terrifying. The entire world believes you are wrong. Economists disagree with you. Governments oppose you. News channels mock you. Even your own team is nervous, but deep inside, you know something they don't. This is the story of a man who didn't just bet against a currency. He bet against the crowd. His name was George Soros. But before he became powerful, he was powerless. And that is where this story truly begins. He was born in Hungary during World War II, a time when fear was normal and uncertainty was constant. Bombs did not warn before falling. Governments did not protect everyone equally. Money did not guarantee safety. As a young Jewish boy, survival was not a strategy. It was luck. He watched systems collapse. Leaders made promises. Those promises failed. Currencies lost value overnight. Families who once felt secure suddenly felt fear. And in the middle of that chaos, a young boy learned something most adults never understand. Stability is often an illusion. Think about your own life. Your job feels stable. Your income feels secure. Your plans feel certain. But what if they are only stable because everyone believes they are? What if the belief disappears? Those early years shaped his mind. He stopped believing in appearances. He started questioning everything. He became curious about how societies function and how they fail. He became obsessed with one idea. Why do people believe things that are not true? Years later, after moving to London and studying philosophy, he developed a way of thinking that would change his life. He believed that human beings are not truly rational. We like to think we are logical creatures, but in reality, we are emotional. Our decisions are influenced by fear, hope, greed, and confidence more than facts. He formed a concept called reflexivity. The idea was simple but powerful. Markets do not move only because of reality. They move because of what people believe about reality. And those beliefs can actually change reality. If enough people believe prices will rise, they start buying. When they buy, prices rise. When prices rise, more people believe they were right. So they buy even more. It becomes a loop, a self-reinforcing cycle. Until one day, doubt appears. And when doubt spreads, the same loop works in reverse. Does that sound familiar? It should. Because that is not just markets. That is life. Confidence creates growth. Growth creates more confidence. Overconfidence creates collapse. By the early 1990s, Soros had already built a successful hedge fund. But in 1992, he saw something others ignored. The United Kingdom was part of a European exchange rate system. Countries agreed to keep their currencies within certain limits to maintain stability. On the surface, everything looked controlled. Politicians spoke with confidence. Economists reassured the public. Media headlines were calm. But beneath the surface, Britain's economy was struggling. Inflation pressures were rising. Economic growth was weak. And yet the British pound was being kept artificially strong. Artificial strength looks impressive, but it requires constant support. Soros studied the numbers. He studied interest rates. He studied capital flows. And more importantly, he studied human behavior. He saw that the system required continuous belief to survive. If enough investors began to doubt the pound's strength, the entire structure could collapse. And then came the decision. Should he follow the crowd and accept that governments always win? Or should he trust his analysis and challenge an entire country? He chose to act. He decided to short the British pound, not with a small position, not with a cautious bet. He committed approximately $10 billion against the currency. Think about that. $10 billion. If he was wrong, his fund could collapse. His reputation would be destroyed. History would forget him as another arrogant investor who overestimated himself. People around him were nervous. Some questioned the size of the bet. Others warned him that governments have deep pockets and powerful tools. They can raise interest rates. They can spend reserves. They can intervene. And they did. On September 16, 1992, the day later known as Black Wednesday, the British government tried to defend the pound. They raised interest rates dramatically. They used billions of pounds in reserves to buy their own currency in the open market. But markets do not respond to pride. They respond to confidence. And confidence was fading. Investors began selling the pound aggressively. Doubt turned into fear. Fear turned into panic. And panic spreads faster than logic ever can. Despite the government's efforts, the pressure became too strong. The United Kingdom was forced to withdraw the pound from the European exchange rate mechanism. The currency fell sharply. In just one day, Soros made over $1 billion in profit. One day. One conviction. One decision to stand against the crowd. The media called him the man who broke the Bank of England. Some admired him. Others blamed him. Many criticized him. But nobody ignored him. Here is the important part. He did not win because he was lucky. He won because he understood something deeper than numbers. He understood that markets are driven by human psychology. He understood that when belief weakens, structures collapse. But do not imagine that this was easy. Behind that massive profit were sleepless nights, pressure, risk, the possibility of public humiliation. When you take a position that large, every news update feels personal. Every market move feels heavy. Conviction does not remove fear, it manages it. He knew he could be wrong. And interestingly, Soros has often said that the key to his success was not being right all the time. It was recognizing quickly when he was wrong and adjusting. That is another powerful lesson. Success is not about perfect predictions. It is about managing mistakes. Now think about your own life again. You may not be betting billions on a currency, but you are making decisions, career decisions, business decisions, creative decisions. Maybe you are building something online. Maybe you are starting a new path. And maybe people around you doubt you. They say play safe. Be realistic. Follow the traditional route. Do not take unnecessary risks. And sometimes they are right. Blind risk is dangerous, but sometimes the crowd feels safe simply because it is large, not because it is correct. Standing alone is uncomfortable. It feels risky. It feels uncertain. But history often rewards those who think independently. After Black Wednesday, Soros became a symbol. For some, he represented brilliance. For others, he represented greed. Over the years, he remained controversial. But controversy often follows impact. He proved that systems are not invincible. They rely on belief. And when belief shifts, even powerful institutions can falter. What makes this story powerful is not the money. It is the mindset. It is the ability to question stability, to analyze beyond surface appearances, to understand that perception can be more powerful than reality. And maybe, one day in your own life, you will face a moment similar in principle. A moment where you must choose between comfort and conviction, between following the majority and trusting your understanding. That moment may not make headlines. It may not involve billions, but it will define you. Because in the end, extraordinary outcomes rarely come from ordinary thinking. The crowd seeks safety. The independent mind seeks truth. And sometimes, the greatest rewards appear when you are brave enough to stand alone, think clearly, and act decisively. Your Black Wednesday may not look dramatic. It may be quiet. A decision nobody notices. A risk only you understand. But it could change everything. The question is simple. When that moment comes, will you follow the noise,